The next management on the show is IREDA. The stock has actually surged more than 90% in 2024 so far. The company's loan book stood at 63,150 crores, which is up 34% from the same period last year. Loan disbursements have also zoomed for this company. To discuss this, we're joined with Pradip Kumar Das, who's the chairman and managing director of IREDA. Mr. Das, thanks a lot for joining in and speaking to us on CNBC TV18. Appreciate your time here. You know, I wanted to ask you about the loans that you have sanctioned, right? I mean, that has gone up almost 4 times year on year. When will these loans be disbursed? And what are the segments that are actually driving the growth for IREDA now?
So very good morning and thank you for inviting me here. First of all, if you look at our growth since last 4 years, growth is continuous and consistent. So nothing surprising. Only thing, if you are comparing the Q1 provisional figure, what we have sent to the stock exchange last night, that appears the sanction on the higher side because the corresponding quarter, the sanction was pretty low. But otherwise, the sanction is quite fair. And when we had done 28,000 crore last year, roughly, and this year having around 5,000 crore disbursement is quite normal in the first quarter. So probably if you go by Q1 comparison, it appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency, being the pioneer in this financing space of RE in the country since 37 years. And,
Correct.
The kind of expertise what our team is having, probably others are not having that kind of here. And we understand the importance of country's commitment also.
Correct, correct. In fact, you've been saying that, you know, ad nauseum is in different conferences as well, because there is a big renewable energy push that the government has, right? And you are at the epicenter of that. So just trying to understand what is the market share currently, and if there is an investment of 30 lakh crores that we're looking at from the government overall, how much of that pie can you get? What kind of growth would your business look at?
As you rightly said, 30 lakh crore rough estimate of additional investment required, and out of which roughly if you take 70-30 debt equity ratio average, so around 21 lakh crore, 22 lakh crore will be required. And from that, if you see the March statistics, around 50% coming from bond market and 35% coming from NBFC and 15% coming from banking space. And in this 31% of NBFC space is with IREDA. And we are continuing, and the way we have done the sanction disbursement in this quarter, it is confirming that we will continue to that having that leading role in the time to come. And in the first question, what you asked, when it will be disbursed, normally after sanctioning, it takes 1 month to 1.5 months, depending on the developer's competence and capability. Because we focus on best quality corporate governance also. We are subject to RBI compliance, and by and so far in last 4 years, our compliance with respect to RBI is best, one of the best among the NBFC and banking space in the country. And remember one thing, we are not only focusing on quantitative growth, we are focusing continuously on qualitative growth. Simple example I'll give, we have submitted the provisional data 30th itself to the stock exchange. And if you see our earlier provisional data and the actual data, there was no major difference in the actual data. And we are planning to again publish the audited result, full audited result for the quarter. Probably that will be fastest in the banking and non-banking space in the country. And already we have completed our AGM on 24th of last month. And this is again first banking, non-banking finance company, as well as first CPSC who could conduct the AGM. So our numbers are growing, qualitative corporate governance standards we are maintaining. So we are happy that we are able to sustain that. And since we have just listed 6 months back, quite a lot of expectation from the market from us with fair amount of uncertainty. But we are happy we are sustaining that kind of fastest reporting, qualitative corporate governance standards coupled with these numbers.
Okay, all right. Hi, Mr. Das. Good morning and good to see you in. So the focus is on growth as well as on maintaining high corporate governance standards, which is heartening. given the kind of run-up in the stock price, well, the street is anticipating bigger things from you as well. So give us a couple of numbers. For this year, what kind of a growth can we look at? And what does your AUM by the end of this year look like? You have a big target. In the next 6-7 years or so, you're looking at taking it up by close to around 6 times. But in the near term, for this year, what should the AUM look like at the end of this year? And also from the emerging sectors, that you've been talking about, I think it's 25% of your mix. How has the growth been there?
See, emerging space is quite good, but in this quarter, the traditional RE is gone up much faster than the emerging one. But if you see the percentage wise, still we are having around 20-25% in the emerging space, and we'll continue to maintain that because it is not only number, but also we need to sustain the asset quality. So, which is enabling for a lower provisioning coverage ratio. Normally, any rating agency or any audit agency, they look for higher provisioning coverage ratio. But people forget to understand that in renewable industry, when you are commissioning the project at a very shorter period, number one. And number two, post-commissioning and testing of 1 year period of technical parameters, the project is fairly de-risked. Then why you need to make provision for that? So when there is no uncertainty, fair amount of uncertainty is completely removed, then we are not required to make that kind of provisioning. So therefore, our asset quality focus is quite much, and as of now, 2/3 of the assets are commissioned assets, which doesn't require fair amount of provisioning, which enables us to improvise our bottom line. So we're focusing a balanced approach, and new and emerging in any case, the expectation as well as the focus from government, from any developer will be on us because we are the extended arm of MNRE, and the N stands for new. And whenever new source of energy financing will come, it is quite expected that we have to come forward and deliver. At the same time, being a listed entity now, as well as being the oldest and expert in this industry, we have to play a responsible role, and we have to take into all kind of due diligence parameters with respect to the project appraisal as well as robust review and monitoring. And that is our core strength, and we are going to continue that.
Okay, all right. But you've not yet given us an AUM growth guidance number for the year. You want to give us that?
I think always I am being asked, and I always give one answer. We never focus on numbers.
Okay.
We focus on our fundamentals, and data is given. And if you, any basic analyst, if they look at the trend in which you have grown, we have never spoken the numbers, but we have always delivered what is expected from us better than that.
Okay, post your Q1 numbers, maybe we'll try to get a rough guidance out of you, sir. But let's focus on a couple of other issues. Reports are suggesting that in the upcoming union budget, there could be an introduction of provisions in 2 PSUs. Namely, the names that have cropped up are IREDA as well as HUDCO, that could be included under Section 54 EC of the Income Tax Act. I wanted your view. Have you heard of the same, first of all? And if included, it'll be great news, right?
Not exactly I've heard. It is we who are instrumental in it. We have been requesting our ministry to forward to Finance Ministry for giving this opportunity to us, because all along the PFC, REC as well as other infra sector, they were getting this. See, green energy sector per se, despite being a 100% green energy finance company, we do not have any kind of concessional benefit with respect to interest borrowing from the market. At least 54 EC will enable us, and we are confident this time Government of India will look into our request. And I came to know HUDCO has also submitted their request. And since it is government's domain and their decision, I cannot preempt. But since our request is based by solid logic, and if you want to speed up this 500 installed capacity by 2030, IREDA is the core agency on which the entire thing depends. And
okay, so Mr. Das, so this will be great news, right? Because the cost of borrowing will be much lower as well.
Yes, definitely. And if you see in the competitive market, when we're not having the AAA stable rate, still we supported the sector by borrowing little higher and lending at little lower, so that we kept the spread at little lesser, so that the project could become bankable. And that is our strength by which we have grown our loan book in last 3-4 years, and also maintain the asset quality. So again, this 54 EC will enable us reducing the borrowing cost. Plus, apart from that, as I have already told earlier, we have opened an office in GIFT City, That is going to be operational shortly. We are following the process, whatever is required. That will also enable us to go for natural hedging. Today, overseas borrowing, when we are doing, we have to hedge and it is costing around 350 to 450 pips interest. And through that, we can save and go for a natural hedging. That much of hedging cost will be saved and which we can pass on to the sector. So that is also another where we can reduce our borrowing cost.
Sure. Mr. Das, very helpful actually. You've given us a lot of numbers. So before we let you go, just wanted to check on the FPO plans. What kind of a timeline are we looking at?
See, as of now, Government of India holds 75% of it. And we need equity infusion again because the way our growth is happening and the sectoral requirement is. So we need to maintain a healthy CRAR so that our stable AAA stable rating is maintained. So we need to infuse further equity. So we are expecting, we have already requested Government of India and there is a process and the new government has come in power now. And that process will take some time. So we are expecting between around November to February, if subject to Government of India's approval.
Okay, so you're saying the FPO could come through between November and February and you need more, you need an equity infusion. So what are we looking at in terms of the quantum of the FPO?
Difficult to say. It is subject to valuation, but we need roughly some 4,000-5,000 crores, which is we are yet to determine the exact number. It all depends on Government of India's consent, how much they are going to allow us to dilute. Because now we are having 75% holding of Government of India. With fresh infusion from the market, there will be a natural dilution by GOI. So anyway, that is the domain of DIPAM. They have the authority and they have to take a call finally how much they will be allowing us. But we require around 5,000 crores equity infusion during this year. Otherwise, at least earlier of the April of next year.
Okay, so you're saying the FPO will happen between November and February. You need an equity infusion of at least 4,000 to 5,000 crores, but it depends on what the government decides. You had a borrowing plan of 24,200 crores, right, for FY25. That won't be sufficient. You're saying you need 5,000 crores more?
Yeah, see, this borrowing is our debt. Okay, and we need to support equity. If we keep on adding debt, then our debt equity ratio is going to come down and the CRAR will also come down. So anything below 17, 18 CRAR will not be healthy and that will be putting a stress on our rating aspect by the rating agencies. And recently, one agency which since 2 years had not upgraded from AAA, AA plus to AAA stable, they have recently upgraded. So, and other two agencies they had given almost 2 years back. So what I'm trying to tell, the rating agencies were having certain challenges or concern as per their understanding. And finally, they have given. And we are also equally responsible in this aspect. We have to ensure the rating agencies as well as the regulators and other external agencies like CAG and other audit agencies, they are quite comfortable with our governance. So we want to have a balanced approach of equity and debt.
All right, we'll leave it there, sir. Great conversation and good to hear, all of the sort of plans that you have. And we'll talk more numbers once the earnings come through for the quarter. We'll take a quick commercial break here. That is the management of IREDA. We'll come back with the management of Happy Forgings and we discuss business.